if you've ever bought 10 times as many shares as you wanted because you added an extra zero in your order entry, go ahead and hit that like and subscribe button, folks. Thanks for joining us for another webinar today. I am your host, Ryan Faloona, and we have a very special webinar for you today. We have Rob Smith, father of the Strat, with us today. So, Rob, thank you so much for taking time out of your Friday. Happy Friday. I am really looking forward to hearing about the Strat. How are you doing today?
Doing great, and we picked a good day to do the webinar during the day because there's a whole bunch of nothing going on. So,
all right, that's exactly why we try to do this on Friday. Summer Fridays are generally the most forgiving for this, so this is going to work out perfectly. I want to thank everyone for joining us today. Again, this is something that, just a little background here, a little plug for you. I have followed you for a number of years. I've never actually executed your strategy, and that's all going to start to change here. So I am just as excited as our viewers for this today. We have a special announcement about the Strat for all of the Pro subscribers that we will deliver at the end of this. But I think the best thing for us to do is, let's start off with, give me a little bit of background about you, how you got into trading, and then how you actually started the Strat before we dive into what it is and how to execute it.
okay, well, I started on the CBOE floor, Chicago Board of Options Exchange, when I was 15 years old. My father ran Merrill Lynch Institutional, so that's how I got in there. But I worked in the Houston Oil Texas Instruments pit, and then through high school and college, I would work on the trading floor, CHX, Chicago Stock Exchange, which at that time was Midwest Stock Exchange, later became the Chicago Stock Exchange, through college. And then once I got down there, when I got out of college, I started full-time in 1989, so I've been at this for 31 years. And when I got there, I worked for a specialist, and that's the guys that control the regional market in certain stocks. And the guy next to me had a computer in 1989, and he had charts up and all that kind of stuff. And so I started to learn at that point, but I got absolutely destroyed, and I wasn't even a member yet. And so my friend had the charts up, and I'm like, what is that? And he's like, oh, there's charts and there's patterns and all this. And I'm like, well, how do you know that? He said, well, they have books on it. And I was like, okay. So I walked across the street, the bookstore, we used to have bookstores, and I bought everything I could find. And I read it, summarized it all. I would go through 2,500 to 3,000 charts every single night. And I wasn't totally trying to figure anything out. I just felt that the immersion would help. I'm like, if I just look at it, I mean, there's going to be a commonality to things that really move, things that before they really move. And I did all the classic technical analysis, and I just kept going through it and kept going through it. And I realized that each thing has an asterisk that said nothing works in all markets. And I'm like, well, how do we know what market we're in? It's like, usually you don't until it's already done. So I started doing my own work, and that's how I started working on the Strat, was just total immersion. Because one of the things I realized when I looked through all these books, indicators and all that kind of stuff, is that they were applying the wrong science. When you say it's a bounce play or a moving average, price doesn't move, it aggregates, all right? And what I mean by that is that it's not governed by the laws of physics. Indicators are based on the price action being governed by the laws of physics, movement. That's not what it does. Aggregation means that for every buyer, there's got to be a seller, right? For every seller, there's got to be a buyer. So when people say things are going up because there's more buyers than sellers, that's not true. You have to match them up. What that means is the buyers are more aggressive, right? And so as we get into the Strat, that's a very key point there, because what you'll see is why indicators are so late is because they have to have price aggregating in a certain direction to give you that buy signal, right? And that's why it's late. But essentially, that's what I did. And I went through, for 20 years, I went through 2,500 to 3,000 charts a night, total immersion. And then slowly but surely, more of the Strat stuff came to me, and I can explain that if you like.
Yeah, no, absolutely. So was it one particular chart where the light bulb just went off and you're like, oh my gosh, I can see all of this now? What was it where it finally, that eureka moment, as they say?
Right, so there was a few of those. And so one thing that is really hard, for one of the biggest misses in any industry's history to this day, is that price discovery works in a continuous series of broadening formations. And we know that because of outside bars exist. What I mean by that is that if you take out one side of the range and you take out the other, and you move down in time frame, that's a broadening formation, right? On the shorter term chart, right? but most books will tell you it's rare. And that's actually one of the only things that can happen as I get into the strat. So when I first noticed that pattern happening, I had my books out. I'm like, it's rare, it's rare, it's rare. And as I started to look for it, it's in everything. And I couldn't believe it. And the way that I saw that, my eureka moment there was a Fed day. And Fed days used to be pretty volatile, right? Not so much now, but they used to be like pretty volatile back in 10 years ago. And so Fed news was coming out, and they're looking for a rate cut. We had problems still, right? And we got a rate cut bigger than expected, right? Which is blatant good news, right? It's good news.
Mm-hmm.
So S&P spikes up, gets killed, and then guns all the way back to the highs, right? If you might have seen that one before. And I was like, why would it do that? I mean, it's discernibly good news. Why would it go up, then down, then up, instead of just straight up? And so at that time, what I figured out was that not only does price discovery work that way, but why that would happen is that everybody's sitting there waiting to hear the news, right? And it's good. Everybody hits buy. Boom, it spikes the price up. The problem is, if you don't have any follow through, you've created an order vacuum below. So anybody who takes profits, there's nothing to hit. So it comes back through, and as it fails the level where that news came out, the guys who held off say, ha, bad news, going down on good news. They slam it short, comes back down. Now, anybody who covers or gets long there, the order vacuum is now twice as big, and it rockets it back to the highs. That's why that happens, okay? And so once I figured that out, and I started looking for outside bars and broadening formations, once you start to look for them, and anybody who trades the strat will tell you this, once you start to look for the broadening formations, you're going to see them in everything, right? Because that's how price discovery works. And so the broadening formations will tend to get bigger by definition, right? And so that's also a reason why some traders will have this problem. I make a little bit of money, I make a little bit of money, I make a little bit of money, I give it all back and then some, right? You know those guys?
Oh yeah, that's happened to me. That's happened to me.
Right, and that's because they don't understand that the range is expanding. They'll say, I'm gonna trade the breakout, right? And so from a mental standpoint, right, when you're looking at a chart, if you have like a tight level like this, and then a green bar that takes it to the upside, nobody will say that that chart looks bad. Now, if it takes out the bottom of this candle and goes back through the range, the best looking chart is now the worst looking chart. And that can happen like that. And it happens all the time. And that's why when you see people trying to trade off of pivots and getting stopped out and then having to go rocketing back to the highs, we know that one. So that's when I started to see the broadening formation was Fed Day, November 2010. Then I started noticing the importance of inside bars, right? Which means you can't take the highs or the lows of the previous bar out. That's an equilibrium. Nobody can dispute that. That's a consolidation, right?
Right.
And the way I noticed that was when silver spiked up to $50, and we're watching AGQ trading $350, right? And this thing can really move around. And we're watching a 1 minute chart, and I would see these inside 1 minute and just explode. And I was like, why would it do that? And I was like, because it's so volatile, there shouldn't be much of a hesitation. So when there is, it explodes. When there's high volatility, it just explodes out of there. So the analogy for that is when you have high IV, high volatility, and then you have an inside bar, it's akin to when you take a top and spin it on the floor, and it looks like it's not moving, but it's spinning around very quickly, and then you touch it, and it goes boom off the walls. Same thing. High volatility and a consolidation is a good combination to have. So that's when I saw that. Time frame continuity is, and I'll introduce that to you, is how we gauge direction, right? And that came in a period of low volatility because something was missing. Like I'd have these inside bars, they just go up a little bit and come back in. You know, it wouldn't really move very much. So time frame continuity principle is based on this. We know certain things that we know to be true, right? Price doesn't move, it aggregates, right? So we want to know who's the more aggressive, right? So if we take multiple time frame analysis, and this is a big problem for many traders, they only go out to a daily. That's as far as they go, right? We start at yearlies. And so when you have that, and you have the price on a monthly, a weekly, a daily, and a 60-minute, which are our basics, we call that full time frame continuity. We also do it on the shorter and the longer, but that's our basics, our monthly, weekly, and daily, and 60-minute. Now, when the price is trading above those four openings, right? And those openings are separate. We gain more information as they are separate, which is to say that on a Monday, the 60 and the daily are going to be the same, and the weekly the same all 60 minutes. Then the 60-minute will uncouple from the daily and the weekly. Then on Tuesday, the daily and the 60 are the same for the first hour, and then we uncouple from there. And then we have 4 separate openings. It doesn't mean we don't trade until then, but 4 separate openings means we can identify participation groups by price and time, which is very important because when the price is trading higher than all of those, and now we know that there's automated trading and maybe 70 or more % of trading now is automated algorithms. We know that the more aggressive are the buyers, have to be. We also know that if you are going to have a computer program trade for you, you have to tell it 4 things. You got to tell it what do you want it to trade, SPY, Qs, Apple. What do you want it to do, buy or sell? How do you want to do it? Buy by staying on the bid, taking the offer, sell by hitting the bid, or sell by staying on the offer, right? And when do you want it to do it? Those 4 things you got to tell it to do, right? So when you have those 4 separate openings, let's say in SPY, and it's all green, here's what they told them to do. SPY, buy, take the offer, do it now. There's no other explanation. That has to be occurring. So we look for that, and then we look for reversals back into that situation. And what I mean by that is you can have the monthly and weekly green, and then the daily and 60 go red, and then the next day they turn back on, and you'll see reversals back into that, right? That's what we look for. So we have that advantage, and because we know that broadening formations exist, we look for failures of certain ranges to come back through. And the reason we do that is because that when we have that condition, right, full time frame continuity to the upside, and then you come back through a previous range, we know people will stop themselves off of where they got in for well-known pivots. So when you come back through a previous range, right, you're going to trigger stops, which you already have the aggressors taking the offer, which causes slippage. If you've ever had a stop slip on you, right, that's what's happening. So it accelerates the buying as people get stopped out and computers are taking the offer. And you'll see these computers turn on and off. Once you start to look for them, you'll see them turn on and off.
So it sounds to me like what you've done here is you've taken what traders are going to do, whether it be a computer or a human being. You've learned how they actually participate in a variety of different trading vehicles across different time frames, and then you've learned how to play what you see on the screen. Is that a fair summary?
Yes, and what we're doing is we're using other participants for our benefit. Because we know that there'll be certain people stopped at certain levels, right?
Right.
And so we know we can use different participation groups to trigger them. So ideally, what we want is to have some corrective activity, and we already know what reversals look like. There's only so many ways price can reverse, right? And there's 3 major ones which I can show you. And if you know that, then you know what to look for when you say I'm going to buy a pullback, right? It's like there's only so many ways what a successful pullback looks like, and we know that. So we do it numerically, and we can communicate very quickly with each other. I make a video every single night about what we're looking for the next day. It's rarely over 3 minutes because we can convey information very, very quickly.
And it seems like it'd be easier to understand too, right? There's not so much information that you're being overloaded. Instead, you're finding the important information, delivering it, and then making your plan for the next day ahead of time.
That's correct. And we're also going to be looking across, as you can see, I've got a lot of screens here. Mm-hmm. So we're looking across because equities give us the best information because you have the broader averages, then you have major sectors, and then you have stocks within those sectors and subsectors. There's a lot of information to know what's going to happen, right? Because you have those tailwinds if you are in the S&P and you're in an ETF, right? All that stuff lines up as well. That means we got multiple machines going on. They're taking the ETFs, they're taking the futures, and they're taking the stock. And,
okay. Yeah. Okay, awesome. So we got a question here that says, what is the strat? And I want to try to answer that. Correct me where I step out of place here. The strat is a trading strategy that takes into account what buyers and sellers are going to do and then uses them to your advantage or uses them for the trader's advantage. Is that about accurate?
Yes, in a basic way. Basically, we know what is happening, and then it's just a matter of execution. We know what's happening. We can define exactly what's happening by using only 3 possible scenarios from one candle to the next.
Okay, and to me, I know in my experience that whenever I'm able to boil something down to simplistic terms like that, I'm actually able to remove my emotion from the trade, which always means that I'm going to trade better. If my emotions are in check, I'm definitely going to trade better. And it sounds like that's what this is. You're using simple concepts, and you're using that information to help you make better decisions, and it's fairly easy to see. It sounds like. Would that be accurate?
It is, and we laugh all day. Charts become funny once you know, like, watch this. These guys are going to take those guys. Where's it going, Rob, up there? Because we know outside bars exist. We're laughing all day. And another good thing about being part of the Strat community is, like I said, we can communicate very quickly. And when you want to take the emotions out of it, we believe trading should be a 2-person job, because if 2 people agree on the same criteria, one person should be doing the analysis and the other one doing the execution. That mitigates mental error, which is most people's downfall. Right.
Absolutely.
There. And so basically I'm air traffic control here, because we all think exactly the same way. When we were talking the other day, you were like, every strat I talk to talks the exact same. And I'm like, we all the exact same. There's no subjectivity, which is a real problem for people. That's why people have mental errors and get nervous. There's subjectivity. Well, sometimes I look for a MACD cross, sometimes it's a breakout, sometimes a bounce play. It's like, no. Here's what reversals look like. Here's the ones in full time frame continuity. Here's their scenario, why we want to be in this thing, for how long.
So I think that that's a great segue into actually looking at some of these charts and kind of visualizing what you've talked about. Mm-hmm. So let's go ahead and do that. Do you have any examples that you want to pull up?
Sure. Let me go to share screen. Share. Screen 2. Okay, so you can see.
There we go.
You can see the scan here, right? So I'm going to move a chart down here. And so one of the great things is, like, we're never taken by surprise, ever, because we know what's happening. What I mean by that is that when you have continuity in your direction, we know what to expect because we know outside bars exist. And I'll show you some good examples on, I always like the monthlies, because you can go back a ways and get rid of the lines for you. Right? So this is a monthly chart of the S&P Spider, right? Okay. And from a visual standpoint, I'm going to show you this, and I'll redraw it the way we do it, but you're going to see this. You see this series that's been going on for years. Higher high, lower low, back through previous range, big continuity to the downside. Then this bar all the way to here is an outside bar of all this. Right? Check out both sides of the range. It actually goes from here to here, but then expanded. And you'll notice these 2 months are completely outside of here, back through the previous range, right?
Yep.
So when we look at this, right, there's 3 major ways price can reverse, okay? And so what we do is we call them scenarios, right? There's from one bar to the next, there's only 3 possible things that can happen, right? So from this bar here, all right, so from this bar here, you'll notice this is completely inside this bar, right? This couldn't take out the highs nor the lows.
And just to be clear, when you say completely inside, you're also including the wick on the candle, not just the body of the candle, but the wick itself.
Correct. Because when you say that, I'm always like, look, dude, they're like, does that mean anything? I'm like, if I got stopped out there, it does, right? So if it traded there, it counts. So this is a scenario 1, inside bar. Couldn't take out either. That's an equilibrium. Right, couldn't take out either side. Now it might be bright green in this scenario, in this situation. You'll also see this one here is also inside. That's consolidation.
Right.
The other thing that can happen is you take out one side, right? So here's this candle, and then this took it to the downside. That's a scenario 2, right? Takes out that side. Then the third one is the outside bar itself, and this is very important to understand that this happens completely outside the previous and then some, because this is how you can tell, like those times when you get stopped out and it goes rocketing back and they blast into the highs, it's going to look like this, right? So we look for these, and then there's only so many combinations that can possibly happen going forward of 1, 2, and 3, right? And so we look for reversals, all right? And there's 3 major type of reversals here, right? Here, you'll see this is a 2 in the upside, right? Because it took out the previous high, right?
Right.
And then a 2 going back the other way. That's a 2-2 reversal. It happens all the time, right? So in this case, back in 2018, did we know about October being a 2-2 reversal? We sure did, right? Another type of reversal is the inside bar after a down or an up, followed by a bar the other direction, right? So it goes down, it consolidates, it goes back up here, right? Did it do it this year? Sure did, right here. Down, inside, and back, up, right? 2-1-2 reversal, right? And the other reversal is the 3 itself, right? Because they tried to take out one side and take the other side. So we know what reversals look like. So we look for reversals back into time frame continuity, all right? So a lot of people don't realize that when things occur matters, right? And so every 60 minutes is like a new day to us. When we have a new 60-minute bar, we want to see are the computers still on? Are they still buying? What are they doing here, right? And how much continuity do we have? Which is to say, do we have a nice long red and green bar? So today being a Friday, you'll have some people, you know, not looking at longer term charts and saying, oh, I'll trade Amazon today. You're gonna trade Amazon? Let's take a look. Look at this, right? This is an inside month doing nothing. This is like the last thing you want to be trading, right?
I was going to say, so that, to me, that looks like no man's land, which is a term I use all of the time. At that point, you're in no man's land. There's no trade here. You have no edge here.
None. And so what we looked for earlier in the year, you see this? There's your 2-2 reversal. And the reason that was key, did we know about that? We sure did. The reason that was key was because the SPY did this, tanked, right? And so as soon as we change continuity right here, anything taking out the Feb highs, we're all over that. And you'll see stuff like W here. Look at this. Your 2-2 reversal monthly, still going. You go to Apple, you'll see this. The 2 inside month still going. So the other great thing about it is we don't have to, this is the signal right here, but we don't have to wait that long because we know there's a change in continuity. So we knew here, right? We knew right here that we could start buying because that was a new quarter and a new month. So you had the quarter green, the month green, the week green, the day green, and 60 green. They turned them back on. The good thing to know about that, it was way below the 200 day. So if you're trying to use a 200 day, you're way late and way off. There's a huge monster rally underneath the 200 day. This was the reversal that called the high. The 3 goes up. As soon as this turns red, we're going to take that out and maybe get more because we're going back to a previous range. And people are going to be stopped where they got in or well-known pivots. And we call it the pivot machine gun. Like when people say I'm going to stop against the pivot, it only makes sense not to do that. And I'll tell you why. Because if there's a well-known pivot that everybody can see, if you had a conversation with 3 or 4 people and say, oh yeah, I see it, I'm long, the pivot, low pivot is 35. I got some at 35.30. I got some at 30.25. I got some at 35.10. Okay, everybody, where's your stop? 34.99. Thank you. Bam. Right? We know that because that's what people have been taught. And they'll post it on Twitter and all that kind of stuff. So you can see here that the SPY on the monthly here, that October 2-2, then here's an inside consolidation where people get chopped up trying to get their money back out of here. Here they are getting washed out and crushed, right? And
Rob, one sec. Can you take this SPY chart and just slide it to the left a little bit?
Yes.
We're missing, our pictures are covering the most recent candles. That should do it. Guys, let me know if that makes it a little bit better for you. Sorry to interrupt there. Didn't mean to interrupt the flow.
That's okay, because if you go back, I love these October examples because it was not just the SPY here. If you go to small cappers, nothing surprises us. We know what's happening, right? And so if you get here, look at this. This was October 2018,
right?
And everything here, as we got crushed down here, that's a 2-2 reversal on the month right here. Then it goes down, continuity changes, buy, inside bar, buy, and what's it doing this month? Inside to the upside. There's your continuation pattern right there, the love mark. So once you understand this, you know exactly what's happening. It's not that hard. So you can see here's the reversal. So we like to enter on reversals, 2-1-2. And then when you have their money, then you can add on the continuation here. Boom, now you got a 2-1-2 continuation.
Okay, so right there in that example, just to and first of all, yeah, moving the chart, that fixed everything. So just on that example there, that green candle right at the top, that's a 2 because it only broke one side of the previous bar, broke it to the upside. The
Correct.
next bar is a 1 because it didn't break either side of the candle, but it changed continuity, correct?
That's right.
And then that third bar, that big red bar there, that is actually a 2 because it breaks one side to, in this case, to the downside.
Correct. And when you come back to previous range, guess where the stops are? Here, 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 and hopefully you wipe them more further down because good things tend to happen. So we're using the automated selling and the real sellers. We're using them to trigger other guys, other participation groups out. Because we know people are going to be stopped against known pivots and or where they got in. So that accelerates. We prefer that coming back through the previous range. Because you can see how choppy it is when you start going into highs, right?
Yep.
Start going into highs. But boy, once you come back through that previous range, here you go down and here was a nice one. Here's your 2-2 here. You can see the broadening formation back here. This is 2016. Did we know about this one? We did. And boom, right back through there. So
and you know, just by looking at this, what's the most interesting to me is that by doing this, by playing this strategy, it looks like you're capturing but by the way this is designed, you're capturing the bulk of the move by doing this. You're not actually taking entries on some of these little candles that are, what is that, back in like October 17. It looks like you're not actually taking those little candles and you know, waiting for the trade to materialize. You're actually taking the reversal candle, where in a lot of these cases it looks like the stock is rocketing in your favor.
Right. So here you'll notice it was also a 1-2 here. Right. So that was the continuation, but it's exhaustion. Anytime you go into new highs or new lows, we call it exhaustion risk. It doesn't mean it's going to tank. It just means that you're not going to have that tailwind of stopping people out because there's no more pivots to go after. It doesn't mean people won't short it because it's overbought or whatever, but you don't have that domino effect anymore. So the buyers have to step up, and if they don't, this now looks awful. Right here, you're like, oh, it's going to new highs. Looks great. I'll buy it on a pullback. Will you? Bam. Back through here, right? We don't buy them on pullbacks. We buy them reversals, right? And so a lot of people don't understand the importance of time. And so every Monday morning, 3 of the 4 major time frames start over again. Only monthly signals are in force. That's it. So what we'll say is we use this phrase, what's the next 2? What will that create, negate, or do? Right? How close are you to being a 2 somewhere? So oftentimes I'll say, well, they're like, I'm looking for a reversal in the small caps. I'll be like, you are nowhere near a reversal right now. On this thing on the monthly, you're nowhere near it, right? Doesn't mean it can't start to reverse on shorter time frames, but it would have to do that. It would have to form a reversal on some time frame first to be able to reverse that. Because right now, you're bright green, so that's the problem with a lot of people looking at shorter term stuff, right? It's just not going to tank, right? Unless you have a reversal, because we know what they look like. Here's your 2, 2, right? And so you'll notice in here, this outside bar, slight higher high, slight lower low. Oh, this is the real move. Is it? Boom. Now you have another broadening formation in there, coming back through the previous range, and it even got worse, right? You know, I mean, now that I draw them for you, if you look for things, this is all you're going to see. I was
just going to say, just on this example, even without the lines, I'm starting to see more and more of these broadening formations just by looking at how these candles are lined up right next to each other. Just awesome. Now you were mentioning different time frames. Is there a chart that you pay attention to more than the other? Or in other words, does one chart trump another, or is it basically the combination of all of these charts when they line up with one another? That's important.
Right. So basically, I could tell you what's happening in the market without a chart at all, because all I got to do is run scans, and I can tell you that when you go through the S&P 500 and the sectors and the stocks, all you have to do is look at the amount of 2s in one direction, and that'll tell you which way the market's going. That would have to change. 2s and forming 3s with continuity, that tells you what direction the market's going at any given time. So when people are looking for shorter term reversals, if you have 2s on everything on the month and everything on the week going in the same direction, it's most likely not going to reverse. We call that a simultaneous break, and they happen all the time. You'll see it all the time. And so on my Twitter, I've got a thing called the Inside 60 Gorilla that I post on, And that's when any of the 4 broader averages go inside on the 60-minute. That's important because that means there's an equilibrium in the futures, right? So either side of that, somebody's got to take it because we don't want to trade a 1, we trade 2s. And so when you have a 1, 1 has to go 2 eventually. It's impossible for it not to. It has to. So we can have a bias because it would form a reversal. It would reconfirm time frame continuity. But then once you have a 2, then if everything's 2 in the same direction, that's a simultaneous break. That's not reversing. But if you see things start to reverse during that, a 2 can stay at 2 or go 3, right? And once it starts failing on a 2, then and continuity changes, we know we're going 3. And that's how we can gauge the magnitude. So we are using multiple vehicles and multiple timeframes all at the same time. But we'll have that macro bias from yearlies, quarterlies, and monthlies for sure. And then every week and day and 60 is going to reconfirm or negate that. So that's why we say, what's the next 2? With that, right, confirm, negate, or do, right? So we want to see if the next 2 would be a 2-2 reversal, would it be a 2-2 continuation, what's happening. And so when we combine that with everything that's going on, we know exactly what's going on. And then it's a matter of when things occur. And say, okay, well, if we go 2, but it's Friday and we only do it by a few cents, and it's a tight range, then we could still go back down. So if we go to something like the diamond's really drying up here, Dow Jones. Oops. And also what I did is for the first time in 10 years, I took 2 weeks off in a row. And I don't take a lot of time off, as you can say. So, and what I did was I filmed about 7 or 8 hours of how to draw the broadening formations and how you see them. I call it the epic poem. It's on my YouTube. And so I go through my entire universe so you can see it all, because although we would draw like this because it looks like the triangle, all we're actually doing is identifying outside bars, right, on a time frame that you can't see. One of the problems that people have is that they're trying to read a chart as opposed to analyze data, right? And what I mean by that is that software is going to present charts to you the way it wants to. So if this was a 2-month chart, this bar would be outside of all of this. So although you can see this very clearly, the higher highs and lower lows, that's true. This is an outside bar of all that, and that's really what we identify that phenomenon. Because when you do that, then you can alter the chart in your mind, right, without having that certain time frame up there, because we know that exists. So we can double our signals, because most people don't know this, that charting software on a 60-minute basis, depending on what software you have, it updates either on the bottom or the top of the hour. Most people have no idea. So sometimes I'll post my 60s on Twitter, people are like, mine looks different. I'm like, yep. I'm like, because you're updating on the top of the hour. That doesn't mean it's invalid. What it means is that it's a very clear example of you're being shown what software wants to show you, right? Because when people are looking at certain charts and trying to read them, I'm like, I could vaporize that chart, your daily chart with a monthly, and it would look completely different. I could go down to a 5-minute, it would look completely different, but it's the same thing. So when you can line them all up, right, and we know what's going on, and we can change them in our mind, we can double our signals during the day, because all we're doing is identifying participation groups by price and time. So that hourly group from the bottom of the hour to the bottom of the hour and the top to the top, they're still valid because they're both an hourly group, right? But the chart looks different. Also, every half an hour chart, 30-minute chart, updates at the top and the bottom of the hour. Now, if you were to, when you can train your mind to update it 15 minutes and 45 minutes past the hour, we call that a sideways 30. You can double your 30-minute signals, because that's still a 30-minute period.
Okay. And I was going to say, I actually didn't know when my charts update. I believe they're the top of the hour. Thinkorswim charts at the top of the hour or bottom of the hour?
Top of the hour, but if you disable the after-hours session, it'll go to the bottom of the hour and go into the cash session.
So there's a power tip even in there. Okay, couple of questions that I want to hit on real quick. How do you discern between an inside reversal or an inside continuation?
Continuity. So continuity will tell us whether we have that, if it's all green or red and a switch. So there's something we call conflict, and that's when you have separate directions on different time frames. So we prefer not that. Depending on how volatile something is, we can trade that because there's something called control, right? So the control, who's the control group? So we prefer all of them, but 60 is always in control. That's what's happening right now, right? So let's say that we have a red month and a red week, but we're green on the day and green on the 60, right? We're gonna watch that 60 minute like a hawk because as far as we know, those sellers aren't here today, right? Or they're not aggressive today, right? They're not here. And we can override those other ones, right? And hopefully then you can change something back to the other color, right? So we're always watching who's in control. And then if we have the same color for the monthly and the weekly and the daily, and then a counter on the 60, we're looking for a reversal and we're looking right as soon as that 60-minute bar changes. Like I said, we can pick up on automated trading. When you look, there's a big difference between executing something at 27 minutes after the hour or 33 minutes past the hour. Most people don't know that. We call that the flip, the bottom of the hour, because you're about to see a new 60-minute bar. We know that. You also had to tell your algorithm when you're going to turn on. And oftentimes, real obvious. You turn it on right, 3, 2, 1, boom. Because we already know that they were there earlier. Because if we have the green month, week, and day, and then you have a counter, right, a red, we're circling that thing like a hawk, especially we have additional signals on the longer term stuff. Because we know they're out there, right? What's the matter when they turn it back on? It's like we were talking about today, early on watching FedEx. And FedEx, here, you can see this. FedEx, we've been on this one because it's been a lot higher, right? You're still coming back through previous range, right? And you'll see here, here's the low, 212, inside bar right there, right? Yep. And then down here, so once it started going, coming back through previous range, it's like we knew to go after this because we have the transports doing this, inside month to the upside, coming back to previous range and not at the highs. And we just saw UPS do this. Launch pad, what's this? That's an inside bar. Did we know about that? We sure did. Boom, right back to the previous range. And so obviously, and you can see the triangles in here, boom, 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 boom. Oh, that's the real move. Uh-oh, no, that's the real move. Wrong again, boom. And so we like to call it country and western. We play things long and short. And so when you get really good at watching these patterns play out during the day, we make more than they actually move because we know how it's going to expand and play out, right? So when things are really volatile, we know what the reversals look like on a 60-minute basis back through, and we know when they wash them out, we can get back in and right back up. So in this, like I said, in this instance, we already knew we had the transports inside on the month. Anytime those are green and UPS is going, FedEx was the obvious choice. Back to the previous range, and here she comes.
So I had another question. I had another question here. It said, can you explain a little bit about how you're drawing the lines representing the broadening formation? So I'm starting to see them here on my own, but when you're actually drawing them on the chart, do you have any rules that you follow or do you have any guidelines that you follow in order to draw those lines?
Right. Mostly I try and tell people it's not as important to understand where they are, but that the phenomenon exists, right? When you come back through previous range, you're going to have one because oftentimes you'd be like, I see the bottom of the chart, but I don't see the top. And I'm like, that's a good thing. You ready? Here it comes. Boom. So ideally what you want to do is just go off old highs and lows, right? And so if we go back to EPS, Ford Warner, and you can see this in here, right? Any series of higher highs and lower lows. Boom, 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 boom. And so one of the ways that why price discovery works this way is to make sure nobody's in for the real move, right? So let's say you hated this thing, you don't want to be short, right? You're like, oh yeah, it's gonna dump. Oh, comes back up, right? Where's your stop? Oh, I think here. Boom, you're gone. Okay, now it's really gonna tank. Oh, right back up, stop them out. Anybody who shorted this thing in here, they're never touching this thing again. And that's exactly when you want it. Now.
Oh, gotcha.
And then here you go. Then the inside bar, and let's go back the other way. Here we come. So oftentimes what happens is that people will get shopped up trading while the price discovery is too early, right? And so by the time it starts going, if you've been stopped out 3 times or whatever, it's something that's trading in a $4 range, and then it's up another $3 the next day, there's no way you're going to touch that thing, right? We know exactly, that's exactly when you want it, right? Now it's moving. And but a lot of people have mental block on that, being able to get back in, because we know we're going to get stopped out. That happens, right? That's okay. Yep. But because we know how to gauge magnitude with the broadening formations, it becomes more like home run derby, where I don't care about a bunch of foul balls with no commissions. That doesn't bother me at all. But we call it doing battle. So a lot of people will say, oh, I got stopped out, didn't work, I'm gonna try another one. When we have full time frame continuity and everything going our way and you get stopped out, you get another signal, you get back in there, right? Okay. Because we know it's home run derby, foul ball. But once things start, you get in that groove, boom, 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 gone, right?
I love the home run derby analogy. That resonates quite well. Now, so is it correct that it doesn't necessarily matter where you are in the broadening formation, so long as you understand that it's happening?
Yes. I mean, obviously, we would prefer to be coming back the bottom of the tri and coming back through. But once you're ripping back through, we're going to take this out. Unless we have a reversal, that's where we're going. You'd have to have a reversal against you. And so that helps keep us in those bigger trades, those longer trades. And also, anytime that we have those shorter term corrections while something's still moving through here, that tells us to add to it. So just like home run derby to bolster, most traders will buy, and then if it goes their way, start to piece out of it, right? We do the other way. We keep buying. If we're right, we want to pour it on. Because you'll hear guys saying, oh, I think it's going from 40 to 60, right? And then it actually goes to 60, and he tells the whole world, right? I called it. But what you know what else he'll say? He'll say, I'm selling out my last piece here at 60. I'm like, dude, if it's going from 40 to 60, I want to be as long as I've ever been when it gets up there, right? Not selling my last piece out. That tells you he didn't know that, right? So we are constantly adding to our winners, right? So what that does is it reverses the process of lose a little, make a little, lose a lot. We're doing it the other way around. I'm like, if I'm right, I want to pour it on, especially with their money. So we always have stops that are still to profit. But when we're right, we're real right. So every trader's always said, it's in beast mode or I got out too early. That's us. I'm like, we're not getting out too early. We're in beast mode and being like, still good, until we get a new higher high and exhaustion risk. But if it's ripping back through the range, we know where it's going. It's going to the back of the highs.
So on the example right here, this last bar here looks like it has a price of 41.64.5. Yep. If that, and it looks like the top of that broadening formation is just over 48. Is that your exhaustion zone? So when you get to 48, are you exiting there, or how are you managing that?
You protect it there. So it doesn't mean it's going to reverse and crap on you, but you want to be aware of any reversals after that. Right now, you can stomach shorter-term stuff because we know this monthly is not turning red anytime soon, right? So gotcha. On a longer-term basis. Then as it gets up into here, we'll start to see what we get anything on the weekly. When does that occur? Is it a new month? Is it a new quarter? When is this occurring, right? Because we might, for all we know, we might have a quarterly signal that's still in force, right? Because that's what we do. We'll look at quarterly signals as well as yearlies. And so one of the great things, too, for getting people into a hit list is having a good scan where I do a macro video. Like when people say, oh, you guys are just a bunch of pound and day traders. I'm like, you can do this, you can use this for any time frame, right? And investing, anything. So when we start with the yearly charts, you'll see this. People are like, well, I need a hit list. I'm like, I'll give you a hit list. Watch this. The 212 continuation year, right? Who's inside and up on the year this year? Look like a pretty good portfolio to me. Facebook, Nvidia, SQ, TDOC, UPS, Amazon, all right?
Oh, man.
All right? And look at these. And look at these moves. If you go to the chart itself, the Qdle here, look at this. Inside year continuation. Inside year. This thing broke at 75.15, trading 244. TDOC here, and then if you go to like Tesla, here's one thing that we like too. The outside bar continuation, right? 3-2. What this means is they were willing to pay up and sell down last year, right? Now if they're aggressive, that means both sides are aggressive. They're willing to take it out. And if one side steamrolls them, they take that out. And if you go down to the quarterly on Tesla, you'll see this, the inside quarter coming back their previous range. Did we know about that? We sure did. Because if that works, you're going to form that outside year, right? And then if you go back to the regular chart on TSR, what's this? Looks like an inside month to me. Did we know about that one? We sure did. Off to the races, Tesla. So hopefully this is resonating with people because it's so visual, right? It's very easy to see things once you see things our way. And like I said, then we can communicate with each other very quickly, right? So like in a chat room, you can just type in a symbol. You don't have to say, oh, this looks pretty good. There is no looking pretty good. There is or is not. Tis green, tis reversal, right? Multiple time frames. So when we communicate with each other, we can just type in a symbol and we're good to go. Another thing I shared the other night, I want to show you how, if you were listening to what I said and you went yearly on the S&P SPY, right? Real simple, going back to 1990, 2, 2, 2, 2, 2, 2, 2, 2, 2, 2000, potential 3, that's a 2-2 reversal in the year 2000. So if you're a money manager, you would not only know to be protecting because of continuity, but then here, your reversal is not getting short, right? Then tanks, then here, inside year for 2003, there's your 2-1-2 reversal, up, 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 up. Financial crisis after exhausting risk. Back through previous range, 2-2 reversal. Stop them, stop them, stop them, stop them, stop them, pound it. And then you'll notice here, once, like I was talking about before, is training your mind to see a time period that's not being presented by the software. What I mean by that, you'll see this to here, these 3 years are an outside bar of all this. And then,
yeah, I see that.
Right, and then from here, because this took this up, from here to this one, these are an outside bar of all that, right? And so we know that this phenomenon exists. And so oftentimes, it might take years, it might take bigger times, but the triangles, they will get bigger because the formation, by definition, is broadening. So you'll have a ton of micro series about it, because if you look at it this year, like as I said, when I say an outside bar is a broadening formation on a shorter time frame chart, you'll notice this year is an outside year. There's your broadening formation right there, right? We also say once a 3, always 3 can't not be, right? A 1 has to go 2. A 2 can stay 2 or go 3, but once you're an outside bar, that can't change. And that also means that they were aggressive enough to take out the highs and sell down. And if they did it once, they might do it again. And so you'll see in S&P SPY, they were aggressive to take out last year's highs at the beginning of the year. They were aggressive to take out last year's lows. And now they're aggressive again to come back and take it up again.
That's amazing. That is amazing. All right, so I wanted to discuss one other thing. I know you touched on risk a little bit when you're talking about scaling into your winners, not adding to your losers. Is there anything else that you use to manage risk in these particular setups, or is that pretty much it?
Yeah, we will be very aggressive on time. And what I mean by that is we don't sit around and say, some people say, oh, we're going to give it wiggle room, something like that. I'm like, we're expecting this to go right now. Right now, because of all what we know, there's no reason it shouldn't go. So if we, if it doesn't go, we have an unknown participant, and so then we'll just get out of the way. So our risk management really is knowing something should work, and if it doesn't, just get out.
Okay. Now, as we had another question here that says, do you also look at, say, 30-minute or 15-minute bars? So we talked about some of the main bars that you use in the strat. Do you ever look at smaller time frames?
Oh, yes. So we call that intraday time frame continuity. So that would be 60, 30, 15, 5, 3, 1. Some people use it too. And especially when things are really volatile. Because what we do is we go down and do surgery. Once we have the big picture, then you can take it down, and that's where you can get all sorts of crazy heads. When you have what you'll see is oftentimes 2 up, 2 down, and then another 2-2 reversal that counters the 2-2 reversal back into the direction. And so we can add on all of those. And the reason we can do that is because the second 2-2 reversal becomes an outside bar of the original 2. So it gives us the magnitude. So yes, we're using all time frames. Some people are on the 1 minute. Some people, usually when I start them off, I start them off at 30 and 60 minutes. That's more than enough time to you know, get your bearings, because at that point, all you have to do is look for the setups 10 minutes before the top of the hour and 20 minutes after, because we know we've got new 30 and 60-minute bars coming. What's the next two? Are you closer to twoing it all, right? So stuff like that.
So it sounds like what you're doing is you're using some of the larger time frames, and then you're kind of drilling down into some of the shorter time frames when applicable.
Correct. And so you'll hear me say stuff like, get yourself an inside fiver. When something's moving, all it's got to do is go inside in the 5 minute. Or something like, here's Apple today. Here's how simplistic this is. It's like, okay, Apple 60. So here, Apple sells off, right? Slight higher high. There's your slight lower low. And then what's this? This is your 2-2 reversal right here on the 60-minute piece of cake. That takes an hour to set up. 455.31, right? Okay, now you're gonna have another reversal against you. Here, it's going 2-2 right now on the 60 below 457.39, right? So depending on the other time frames, now you can reverse with their money, right? Because you've already made this, and so you don't care. This is the country and western right here. See, we buy it, we sell it back down, right? And that can be fun, because most people, when they get out of their winning trades, because we're only getting out because of a reversal, we don't just get out, we reverse because we have a reversal depending on what's going on in the other time frames. We can do that because they're already trading with their money, with house money, right? So like I said, we trade the reversal, and then we can go after a continuation, but in this case, it was just chopping around.
And so that last candle that you just had your mouse on, that looks like that is still going to be a 2, right? Because it looks like the top doesn't break the previous green candle's high, but the bottom, the lower boundary is broken. So we're in a 2 here.
That's right, 2 down right now. Now, obviously, we're just looking at the intraday, because if you go to the daily, you're going to see this. You're going to see this. It's a 2 down, but not much of a range on it.
Right.
So as I was pointing out, like in Amazon and stuff like that, as you get further into the day or a week or a month, we like nice long red and green bars on the longer term stuff, because that tends to continue. Right here, you're at exhaustion or asking the new highs, right? It doesn't mean it's going to get killed, just pokes down a little bit, right? But we like nice long red and green bars. So when you come to the middle of the day, you want to look at your daily chart. And so we'll run scans here, right? Here, who's up or down the most by point, right? And percentage by noon. That's who we want. We don't want things that are doing nothing. And so when you get to, like, today is like halfway through the month, and I showed you that Amazon, it's halfway through the month, it's doing nothing, right? I want things that are screaming, right? Because they tend to go further than you thought. So like on a Thursday, yesterday, late Wednesday, you'd start looking at weekly charts and saying, I want these things that are continuing strong. So each week we'll reconfirm what we know about the month, right? So the second week reconfirms the first week of the month, right? And then the third will reconfirm that. And so if you've ever heard the term turnaround Tuesday,
yep,
that's a reversal that's reversing the weekly attempt, the first attempt. That's why that works. But that's going to happen all the time, right? Every bar is going to either confirm or negate what just happened. So every Tuesday is either going to reconfirm or negate what happened on Monday. The second week is either going to reconfirm what happened in the first week, right? So we're always watching that as a sequence.
Awesome. Okay, so 2 real quick questions here. Number 1, are you doing this strategy with shares or options? I guess I would follow that up with, can you use just regular equity or options, or is there one or the other that works better for this?
No, we trade everything that moves, anything that we can get our hands on, because it's so efficient. So on a day like today, we call it cheapo option Friday. So we're definitely scouting for, when I get off here and I go back, we're definitely scouting option setups for the afternoon, because obviously the percentage gains are going to be bigger, less capital, and on Friday there's less premium. So there's people using this for everything. So you don't always have to be directional as well. When you see that inside bar forming like on Amazon, you can use that to strangle it, iron condor, right? I mean, this is going inside and doing nothing, right? Or if you have a signal coming off the bottom of the triangle, not only can you buy shares or buy options, some people will choose to do a credit spread. Say, I'm just going to do a bull put spread because I got a signal off the bottom of the try going up. And in order for that to not work, not only do I have to have a reversal's got to set up. And that will take time. And a credit spread, that's what you want, time, right? And so there'll be people using this in everything.
Awesome. Then the second question that I had there was, how does volume fit into your method? You know, I'm looking at all of these charts here. We're looking at all of the different price movement, all the different candles. I don't see a volume stick anywhere. So tell me, how does volume play into this?
It doesn't. Now, everybody's different, all right? I'm a purist of my own strat, and I will tell you that more often than not, once it's doing something like lined up the way we see it, the volume shows up. Right, especially on the downside, because volume, there can always be more. So to me, it's subjective. You know, obviously it can be way out of whack and say, okay, look, something's going on. Right now, I get that, but there can always be more volume. Like if you were trying to look for a reversal and say the airlines, because of all the volume on the bottom, you got murdered. It just sat there and did nothing. Right? We want to know that, like I said, when we come back to a previous range, and the more aggressive are the buyers, the volume is going to show up as we're going to trigger a bunch of stops off, and that's going to help it.
Yeah, I was going to say, it seems to me like just from mentally thinking about this, you're going to see that volume show up on a lot of these reversals. Is that accurate?
Yes, you will.
That's kind of the feeling I got there.
Right, and then here, like I said, if you just stay on 30/60s, it's not that hard because if you go to the Apple again here you go. It's already working again. So the thing is, even if it comes back and stops you out, I don't care. Right? I'll just get out. Right? It's liquid enough, right? Make sure we can see that. I'll just get out. But here's your today. 62 reversal, 2-2 reversal. And you're running out of day. So these options are cheaper. Right? Boom. 2 trades. Not that hard, right?
All right. And then I got another question here. I think this is actually a good one for some of the newer traders. When you're going to start this strategy, what would you recommend is most important? What would you recommend someone that's brand new to this start with? I guess, in other words, where would you start?
Okay, usually what I do is I go on my Twitter and I put it in my chat room, a gap list that we're watching. So we want things that are moving, right? Because a gap list is going to give us 2 things. It's going to give us things that are gapping into exhaustion or things that are gapping back through previous range. And then what I do is I usually have them stay on 30 and 60-minute charts and look for reversals, either a 2-2, a 2-1-2, or a 2 goes 3, and just trade those off the 30 or 60s. Like I said, it's not that hard because you only have to look at a handful of stocks and 10 minutes above the hour or to the hour and 20 minutes after. What's the next 2? Do you see anything setting up, right? And so it's not that hard. It slows it down. Like I said, this takes an hour. Right? This took an hour to form, and then it had to open, and then it had to go. Right? So it gives you more time to prepare for it as opposed to jumping around so much.
And then, so is your entry actually when the reversal takes place?
Yes, we'll cause it. If this thing is bid below this, we'll hit it. We're always throwing the first punch, right? Because then we can find out how tough they are, right? Because when we have continuity, we don't have full time from cutting this thing. But if we did, we have every reason to believe it's going to work. So we're going to throw that first punch. And if the guy doesn't go down, we get out, right? When you hit somebody in the face that you think is going to drop and they don't, you get out of the way, right?
That's a great analogy. Okay, so this has been real awesome. We've got 2 minutes left, a little bit less than 2 minutes here. So I wanted to, I teased a special announcement. I kind of want to cover that real quick. Rob, I'm going to go ahead and actually share my own screen, which is going to cancel yours. Just give me 1 sec here. All right, so here you should see Benzinga Pro on the screen. And the special announcement is that Rob has been so generous with his time that one of the things we're going to do for anyone that is a pro member, I've gone ahead and created a room called the Strat. So you can see here in the bottom of your channel selection list here, I went ahead and made a room called the Strat. If you don't have it, just go ahead and refresh your platform. It will be there. In this particular channel, I've posted several of Rob's articles that he highly recommends, as well as a link to his YouTube channel to do more education or kind of getting yourself familiar with the Strat. Now, Rob, we also created an account for you. I saw that you were in the chat yesterday posting. That's awesome. Can we count on you to make some more strat-based posts in this chat room going forward?
You bet you, because I'm very excited for new people, because my firm belief is no trading decision is going to be made without referring to what I just showed you in the future. It's too efficient, way too efficient, because and the way we can prove that is that everybody knows that almost every trader loses, right? I mean, most people that set out to trade lose, right? But then there's only one commonality, because it's both sexes, people of all ages, all over the world. The only commonality that they have is they're trying to use classic technical analysis. That has to be the problem. We've solved that, right? This is how it works. This is how it has to work, right? It's impossible for price to trade outside of what I just told you. And once you understand that, things become very clear on where we want to be, and charts become hilarious. We're laughing all day.
Awesome. That's exactly what I'm hoping for here. Not only are we going to go, I see one of the members is already in there posting. That's awesome. And just for one more thing, that right now the chat is kind of rudimentary in terms you can pretty much only post links and text. But as another tease here, in the next few weeks, maybe a month here, we're actually going to be expanding our chat so that you can do things like post charts. And I think that will be really, really helpful for kind of showing, you know, for example, a 2-2 reversal or any type of you know, setup on the strat. We'll be able to actually post pictures of that in the chat room. So I encourage anyone that is interested in further learning of the strat or actually using the strat, go ahead and check out this room. Rob, we have a room dedicated to you. I kept you a minute over here. I'm sorry for doing that. Thank you so much for being with us today. I really appreciate this. Let me ask you, we've had quite a few compliments here in the chat here. So would it be possible in the future to get you back for another one?
You bet. Anytime.
Awesome. Really appreciate that. Thank you again so much for joining us. Viewers, thank you so much for spending some time with us. Again, there will be a replay of this. Rob, I will send you a link. You can share it with whomever you please. Anyone that signed up should get an email with the replay link. You'll be able to view this anytime that you want. Again, thanks so much, Rob. Have a great weekend. Stay safe. And remember, Zingers, until next time, happy trading.